man among many. Hello there, this is a video about 10 books on investing you may wish to consider reading if you're looking to learn more and possibly improve your knowledge and understanding of investing. I would like to say from the outset that nothing I say in this video is or is to be considered financial advice. Any decisions that you make or do not are purely your own. Needless to say, investing is risky. And you take those risks on yourself if you do decide to look further into investing. So this video is me presenting 10 books that I feel that would be valuable to anyone considering learning more about how to analyse companies and consider whether or not a particular company represents a good investment. The first book I would like to bring to your attention is Investing for Dummies. Now, this would be a good starting point for anyone wishing to learn more about the bigger picture and to gain oversight of what the map of investing looks like. This doesn't just go into stocks and shares. This talks about other forms of investing, for example, in property, in gold, in bonds. So this gives a very good overview of different ways of investing. It looks at the nature of those types of investments and what the returns have historically been, and what the pros and cons of each are. So this would be something worth considering if you are a complete novice and haven't really considered investing before. This would possibly be an excellent starting point. The second book I would like to bring to your attention is one called The Defensive Value Investor. This is a book by John Kingham, and this book outlines a number of principles that John Kingham has used in his successful career, and in particular he looks at not only finding value, so that is finding companies with good underlying business models that are easy to understand, that have good profitability, consistent profit margins, with an emphasis on the defensive quality of these companies. So not only finding companies that have good underlying businesses, but companies that have competitive advantages over their competitors, and companies with moats. So really it's about finding valuable companies that are safe or relatively safe. And John Kingham gives you a number of principles that you can apply when analysing stocks to find these qualities, to hopefully provide you with what he considers a good long-term strategy, which is to find companies that have a good probability of achieving success over the long period of time. Another book which wouldn't necessarily be for beginners or novices would be a book called Smart Money. This gives you a framework and a number of qualitative and quantitative ways of analysing stocks. So it looks at ratios and numbers to look out for, PB ratio, PE ratio, all of these different measures which you can find online when you're considering whether or not a particular company represents good value for money. This gives you ways of improving your ability to do that with specific examples in the real world. So it's quite a thick book, and this one would probably be for more seasoned, more experienced investors, some that already have some experience of investing, this would be a good book to learn more. A great little book I read a number of years ago now is one by Christopher Brown called Value Investing. And what this book is about is finding companies, once again, that have good intrinsic fundamentals. So companies that not only have a good track record of profitability, but have a good probability of having decent future earnings or future return. It's similar to Warren Buffett's approach. His methodology for finding companies, finding good quality companies and then waiting for the share price to dip. I think it was Benjamin Graham's strategy or recommendation that one finds great companies and gives a margin of safety of roughly 1/3 lower than what the intrinsic business could be worth in 5 years' time, say. So essentially what you're doing, you're buying very good companies at discounted prices. So this one would be a very good book to read, not too complex as well, would be fine to read for new people or anyone that doesn't have any experience possibly in investing. Another book, this one is by John Lee, How to Make a Million Slowly. What John Lee talks about in this book is how, once again, finding value. Really, this book is somewhat autobiographical. John Lee talks about what he did. He was one of the first ISA millionaires. So ISAs allow UK citizens to invest up to 20,000 per tax year, April to April. And John Lee walks through his principles of how he found companies that enabled him to reach the £1 million mark, and talks about what those principles are. They're quite specific too, they're not generic, general pieces of advice. It gives you specific numerical principles to apply. I'm not going to read through all of the principles that he puts forward, because really you should read the book yourself. But I'll read you just 3 of the principles that he puts forward. So he says, these are the rules or principles that I've followed over the past 50 years of investing. I'll talk about them in more detail as I go through the book, but taken as a whole, these provide some key lessons for the investor. Number 1, endeavour to buy shares on modest valuations, hopefully with an attractive yield and single-figure price-earnings ratio and/or discount to net asset value / real worth. Number 2, ignore the overall level of the stock market. Don't make judgments on the macro outlook, leave that to commentators and economists. Focus on your particular selection. Number 3, be prepared to hold for a minimum of 5 years. Okay, he lays out 12 in total and then talks about them in more detail throughout the book with specific examples of how he applied these and was able to achieve an amazing return on his investments. So this would be good for UK investors because it talks about UK companies. So this is one for you to possibly consider. Great book. This is a book about the essays of Warren Buffett. Now, the book is called Essays of Warren Buffett. What the author of this book, Lawrence Cunningham, has done is he has taken the reports written by Warren Buffett for the annual Berkshire Hathaway reports. Warren Buffett is the CEO of Berkshire Hathaway, has been for, I think, for around 50 years now, for a very long period of time. And from those annual reports, and he has selected, I think, 20 in total, which provide readers with an excellent understanding of the way Warren Buffett thinks and the principles he applies, including with the mathematical analyses that he made regarding particular stocks, which have led Warren Buffett and Charlie Munger as well, recently died this year, rest in peace, Charlie Munger, that's enabled the legendary success that Warren Buffett and Charlie Munger are known for throughout the investment world. But Warren Buffett wrote these reports himself, and so you're learning from one of the greatest business minds there has ever been, and somebody who is an avid reader himself, and his track record speaks for itself. So this would be an excellent book to read to learn more about his strategy. One of the things he talks about more perhaps than other books that talk about value investing is finding good managers, people that he trusts, have good business sense, that are open and honest, and are looking at the things he wishes to see, which make good business sense. So this one is well worth considering if you wish to learn from someone who is clearly a leader in the field of investing and has been for decades. Another book which is great to read, this one is less numerical than the others, it's less statistical. What this book looks at is a number of principles regarding how people think about money and finance and investing, and how you can change the way you think in order for you to improve not only your investments possibly, but the way you deal with your own finances, your approach to how you use your time and how you think about yourself, in terms of someone who is looking to improve generally in work and in being productive. Once again, I'm not going to read out all of the principles that this book goes into, but I'll lay out a few. So number one, no one's crazy. So chapter 1 is about no one's crazy. And what this book goes into subsequently is a similar topic to the one explored by Daniel Kahneman in Thinking Fast and Slow, which is that human perception and human judgment is very much, if not flawed, badly affected by the irrationality produced by emotions. And we tend to think things are worse than they are, and we can often think things are better than how they actually are. So our judgment is often skewed. And this particular principle is good because it invites the reader to consider how we are prone to these errors and mistakes and what we can do about them to try to be more rational. The one thing that always stands out with Warren Buffett's approach is his cast iron commitment to logic and rationality, and not jumping on the bandwagon, not following the crowd, but maintaining independence of mind and good understanding of sound business principles. And something else that this book goes into, which is the opposite of that, something called FOMO, fear of missing out. Some people see other people being successful in a particular area, in a particular kind of investment possibly, and the fear of not being on the winning team can lead people to jump on the bandwagon at the wrong time, just before it's about to decline. So all of these types of things this book looks at through real stories, and it causes one to reflect on their own way of thinking and their own behaviour, and so can improve quite considerably our attitudes and our habits, which in the long term would possibly make quite a big difference. So that's the first chapter. I'll give you a few others just to give you a flavour of this book, because it is well worth considering. So, confounding compounding. 81.5 billion of Warren Buffett's 84.5 billion net worth came after his 65th birthday. Our minds are not built to handle such absurdities. So this book, this particular chapter looks at compounding and how in the long term, small returns compounded, small annual returns compounded can lead to huge gains. There is something called the 72 rule. The 72 rule states that if you divide 72 by your annual rate of return, that gives you the number of years it would take to double your initial investment. So let's say your annual rate of return is 4%. Many value investors would be quite happy with 4%. That would take 18 years. Let's say you put £100 into company A, and every year that company paid you a 4% dividend. If they were to do that and you reinvested that 4% every year, it would take 18 years for you to have £200, presuming all else being equal, no taxes, and the share price remaining the same. It would take 18 years to double your £100, because 72 divided by 4 equals 18. If you were making 6% annual rate of return and reinvesting that, it would take 12 years. 72 divided by 6 equals 12. So a mere 2% every year compounded has the effect of taking 6 years off the time it takes to double the initial investment. And that's all about the power of compounding. Einstein called compounding the eighth wonder of the world, because over a long period of time, the impact of compounding is tremendous. And that's why Warren Buffett made, 81.5 of his 84.5 billion net worth after his 65th birthday, because it is snowballing. It's an exponential curve. So well worth reading this book. Another book on Warren Buffett. This one is biographical, looks at the habits of mind of Warren Buffett, how he thinks about stocks, how he thinks about life in generally, and looks at the decisions he made regarding a number of companies, including Coca-Cola, Geico, Wells Fargo, Heinz, and puts those decisions under the microscope and analyses them, and seeks to explain why Warren Buffett made those choices, and what his methodology and rationale was in those decisions. So if you want to learn more about Warren Buffett and his methodology, this would be a great book. It's very well written to consider. Second from last book I'd like to present. This is a wonderfully entertaining, compelling, fun, engaging book to read, full of logic, but not so that it's a cold, bland, boring, data-driven book. Peter Lynch in this book, really his enthusiasm for stocks and investing shines through. He makes a number of points which are very much common sense. For example, one of the things he says is that companies that don't have debt don't go bankrupt. And a statement as simple as that cuts through a lot of the noise. Another statement of a similar nature that he makes is that what fundamentally matters is earnings, and the share price, although it may deviate from what the underlying earnings would suggest the share price to be, over time it will return to wherever the company's earnings are. And so he says there's a kind of 1-to-1 ratio over the long haul regarding that. So his simplicity and his ability to find principles that are true and that actually work. The book is called One Up on Wall Street because he also suggests that the private investor has a number of advantages over Wall Street. This book is all in dollars, but you can apply the same principles to the UK. In that private investors, because they possibly walk on the high street, they go into shops, they have more access to knowledge about businesses, about companies. You know, we walk into supermarkets and different shops, we have a better understanding possibly than people that are making decisions far away in an office. And so what Peter Lynch suggests is that it is possible to beat Wall Street because the private investor has this information, and also it's not necessarily beholden to investors and needing to be ultra conservative, so possibly is able to see great opportunities better when they arise. So this would be a great one to start with. Actually, it's not too difficult to read, and it is a very fun. There is quite a lot of maths in here as well, but it's not complicated formulae. It's often fractions and decimals, you know, easy proportionality, effectively. So a great book to read. The last one I would like to talk about, now this one is considered by many to be, including Warren Buffett, the best book on investing. It was written by Benjamin Graham, originally in 1949, actually, I believe. And in here, he talks about value investing and about analysing a stock in order to calculate its intrinsic worth, its intrinsic value, and to estimate what the appropriate share price is, or what the price to pay for that company is. It's full of sound wisdom, of principles that Warren Buffett and many others have used, and their track record speaks for itself. Can get quite complicated. I wouldn't necessarily start with this one. I would maybe start with One Up on Wall Street and one or two of the others first. But this, if you are considering investing, then I would say this is a must read, because it's just full of so much insight from a genuine expert who really does know what he's talking about. So this would be an excellent book to read. Now, lastly, what I would like to do is just to, if you don't want to start with some of the heavier material, perhaps you would like to just dip your toe in and just get a flavour of the language of investing and the investment world, you know, to maybe just see what it's all about. Because if you're not familiar with this world at all, some of the language, the words, the ratios, the numbers can all seem a bit, you know, you simply won't understand what it all means. So good starting points might be The Economist. This is a weekly magazine about the state of various economies around the world. Goes into politics as well, quite naturally. And it's a good book a good magazine rather, to read, to sort of immerse yourself a little bit more in the bigger picture and the context of world affairs. Money Week is also a magazine that comes out every week. Does have some information about stocks and shares in here. But once again talks about sectors like technology, the growth of AI, for example, and how this might affect businesses in the future. So it's more related to finance and business than The Economist. But once again, excellent magazine to read, and comes out on a weekly basis. A magazine that's specifically about stocks and companies is Investors Chronicle. This comes out every Friday, I believe, and in here lots of information regarding UK companies with analyses of their balance sheets and discussions of their potential earnings, their potential growth, how the future of the field they're active in looks. All of this is explored in this magazine. So very good magazine to start with if you just want to just find out a little bit more before you sort of dive into these bigger books. But hopefully this video has been useful. As I said at the very start, investing is risky, and you must make those choices and decisions yourself. But if you do want to learn more, these books that I've laid out for you today, I think would be well worth considering. Thank you.